Are you focused on your investments? Are you focused on your goals? So if you're someone who is worried about your equity investments and keeps thinking what will happen to my investments whenever there is a drop in stock market, then this video is for you. Hi, hello, this is Ganesh and your author of the book Money Leaks and Millionaire Coach. I help people in creating wealth. So please share this video with your friends who keeps worrying about equity investments. If they are just invested in equity mutual fund and kept worrying last month, like what should I do? In the last 2 years, I had invested and it didn't go anywhere. And if they are invested in a stock market and the stocks had tanked by 20% and they're worried about what should I do? So this video is for these people. So if you are finding it easy to understand, if you're finding it interesting, please share this video, please share these things with your friends so that they also know what to do when investments are not going the way we had planned, right? So let's get into that. So what should I do if investment is not working? So that's why these three tips I thought this should be of much more helpful. Like the first tip can be achieving the goal. So what for you are invested first? If you're clear on that, then you will stay invested till the goal is achieved. For example, you are invested for your kids education, which is almost 15 years, 20 years, 18 years down the line, because if you had invested just when the kid is born, right? So it will be around 17, 18 years for his higher education. So in that case, you have lots of time. Why are you worried about a short-term trend like drop in value? Just remember the 2 months before, when auto sales were down, when data was not good, everybody was worried about what will happen to India. The economy is going to crumble like anything. GDP is going down. But just because some tax benefits has been announced and macro conditions, like globally something has changed in the last 3 days, the market has touched 40,000 just because of Diwali and some earnings growth by some of the some of the companies. Maruti, for example, had decent numbers, though they had given deep discounts, and some other companies they had projected, they had bettered the expectation of the stock market traders, so that the stocks had zoomed up like anything. So it just went up. So if you had already invested, you would have experienced some 20-30% returns in the last 1 week. So no one was expecting this to happen, so this happened. So market rewards for people who are already invested. So stay invested. So because this is a short term trend, nothing has changed in the last 1 week. Auto sales didn't zoom up, it was already down. And yesterday there was a and today there was a article in the front page of Economic Times that market GDP is going to slow down further, and the second quarter slump is going to be much bigger than the first quarter. So things are not as good as good as expected, but the base but stock market behaves irrationally at times. Putting everything together, market will may go down. So but staying invested, if you're a long term investor, you don't need to worry about, because it's intact. India took 60 years to become a $1 trillion economy after the independence, and and it just took 7 years to become a $2 trillion economy. So the next set of growth is going to happen much faster. So if you believe in India's story, if you believe in India's economy, then you can stay invested for long term, and especially for your goal. And the second thing can be the clarity. Most of the people, they never know, they don't understand if they are invested in a ULIP policy, or if they are invested in a mutual fund, because both has NAV and both has charges and both has been sold by this mostly the same companies. Some just because, for example, HDFC has a insurance arm, HDFC has a mutual fund, so they never know if they are invested in a mutual fund or if they are invested in a ULIP policy. Then they get the confusion. If the market is going down or if the value is not good, they'll be worrying, should I continue my investment, should I continue my mutual fund? But the thing is, they are invested in a ULIP policy. The charges are huge, then the loss will be much bigger. If the stock market returns are low, then the values, the returns, what it would have given will be much lower because of the charges in the ULIP, right? So the clarity is not there. The biggest thing is here, the clarity was not the clarity is not taken up. So because of this, you may lose your sleep, because your returns are going down, and steeply, that too in a period of 2 to 3 years itself, and then you will be closing down your policy or closing down your mutual fund. So you should have clarity, where am I invested, and this clarity can be linked with a goal. If you had chosen a goal like kids education or your retirement, or any long-term goal beyond 5 years. And if you had invest in equity, that too in equity mutual fund or stock market, if you had chosen the best stock or done your basic analysis, and if you had chosen the best mutual fund doing your basic analysis, then you don't need to worry. You can stick with it, and then analyze, see if it is a common phenomenon, like market is down across the sector, then you can be relaxed, stay invested, if possible invest more. Now with clarity, you would have invested a much bigger amount, and then you would have uh, your goal, you can achieve it. You don't need to worry about it's just 3 years, and it just already 3-4 years are gone and my investments are not given more than 6-7% interest. It's not that, because the cycle is maybe changing, but within a year equity might give up bigger returns. So that is how it works. So stay invested. If you're investing in equities, you should stay beyond 5 years, and returns are taken care by that. The last point, last step, what I can say is that timeline. Yes. So all the timeline what I have been mentioning till now is that 5 years and beyond. So 5 years and beyond is like a bigger timeline. You believe in the stock, you believe in the equity, and just like Warren Buffett says, you should believe in the business, then you invest. If you are starting your own business, you may not close it within a while, right? Within 3 months or within a year or two, you will give it a try. You will try some other things, and so that the stock moves up, the business moves up. So the same goes with the stock market equity investment. Stock market is specific to direct equity, and equity is either you can invest in the stock market, or you can come via the mutual fund, so equity mutual fund. So both is equity investment. So if it is an equity investment, you can stick with it for a much longer time. See to that it's growing, and just monitor, keep monitoring. You don't need to think like whether it will grow or should I change. You don't need to worry, because the timeline for which you had invested is that it's more than 5 years. Let's take an example of your retirement. It can be, if you're investing at the age of 30, it's close to 25 to 30 years. By the age of 55 or 60, you are planning, and it's close to 25 to 30 years of timeline. And if your goal is clear, it's for retirement. If your uh, clarity that it's an equity investment, I'm going to stay invested for much bigger timeline of around 20-25 years, then stick with it. You don't need to worry about whether the market is going down, stock is going down. Ultimate reason is that the best example, the Bajaj Finance, in the last 10 years, it has grown like anything. If you're, and if it is an Eicher Motors, the the makers of Thunderbird and Royal Enfield, so it has grown like anything. If you had invested 1 lakh, by now it would have given you 57 lakh, or at least 30 lakhs in these two stocks. So if that is the case, think about, if you're investing now and if you're staying invested for the next 25 years, it's easy to make a crore just with an investment of 1 lakh. So these are not rosy pictures. You should do the analysis by yourself. These are the examples which had existed in the last 10 years, and you should take what to say, the fact that equity investments grow. The Asian Paints is there for more than, it has been started in 1942 by four friends, and still it's growing strong. And Aker Motors is one of the world company, and ITC, it's a tobacco company which started in 1906, I think, and it's still 1910, and it's almost more than 100 years old, and it has diversified itself into business. Uh, Consumer durables and hotels, welcome hotels. ITC welcome hotels, the 5-star rated hotels. And it's not only cigarette company, it's slowly diversifying itself into be a FMCG company. Britannia, which is another old company. So these are the stocks which are there for the longer term. So we don't need to worry, why should I how will I monitor, and what will happen to my stock? Because if you are choosing the right stock and staying invest, you know that the timeline is 25 years. You can stick with the stock or stick with the equity mutual fund, right? So this is the thing I just want to say. So 3 tips to stay focused on, is to stay focused on your investment, which means that you are achieving your goal. Say for example, your retirement goal is you need to accumulate 5 crores, and you are putting by SIPs or whatever means, invest a small portion in equities. Get your financial planning done by your financial advisor, so that you are clear, like your retirement is for 25 years, and I'm going, these are the investment avenues I'm going to use, and this is the corpus I'm going to create. Once this is clear, everything falls in place, right? So if you find this tips interesting, and if you feel that this is where your friend is also making a mistake, please share this video with your friends, so that they'll also know how to stay invested and how to stay focused on your goals and achieve their financial goals, and it becomes easy. So these are the things which is never you will never see or out of experience, out of your experience, you should share with your friends. So then only it is easy for them to stick with the investment products or investment goals, and they can also be happy. Money creates happiness. If you say no, then you should be already having lots of money, right? So thanks for watching. Thanks for going to share my video with your friends. And if you still think if any other queries are there, please comment in the below section so that I can address your queries, and I can even share it in our next Facebook Live so that everyone knows what to do for that query, right? So thanks for watching. And another interesting thing is coming up in the month of November is I started a close group, and I'm adding my friends and other people, where it is going to be a closed group of people who will know interesting tips and things about share market. And if you're interested, please click the below link on Facebook in this post, and there will be 3 questions. Answer the 3 questions and become part of my closed Facebook group community. So I'll be sharing interesting things in the November. It's already started. It's going to be in the next within the next 2 weeks. Thanks for watching. See you in the next video soon.